Hey, welcome to the Gary Abbott YouTube channel. Something very unique for me to do today. It is the 4th of July, the day Trump is signing what he calls the big beautiful bill. As we all know, there are different sides to this bill, but all I care about is what is its impact on 65 and up? What is the impact on your taxes? As we all know, we were promised a year ago, no more taxes on Social Security. Yay, that's what I was hoping for. Through this process of the budget, nope, that is not what has come out. Something else has come out, increasing the federal standard deduction for people 65 and older. And this is not a talking head video. I hate those. People come on, they give you little bits, and they don't really give you the real impact or for how do you to figure it out. So today, that's what I'm going to do. Let me get my iPad fired up and show you the language in the bill, what the changes mean in the standard deduction, and a sample of how you can figure this out. Because it's complicated. It's not something that most people can figure out. But here, let's go to it. Let me start my iPad. I'm going to end up with that on the screen so you can see what I'm talking about. So the first place we're going to go is the language of the new big, beautiful budget bill. The first thing I want to highlight, and you can see it highlighted, senior additional standard deduction. There was one in 2024. The additional standard deduction for people 65 and older was $19.50. Now, it says if you were married, filing jointly or separately, the extra standard deduction was $15.50. So it was kind of $19.50, $15 per qualifying individual. You double that, you got about $3,100. There was kind of a bonus that you were 65. It was already in place. And I'm not touching, you remember there's checkoff boxes. Are you blind? Are you head of household? There's other calculations, but I'm not going to go into that. This is what was on your 2024. So next, we're going to look at the new language for the new standard deduction for seniors. In the bill, you have to go to page 216, and I've done that for you right here. It's section 70103. It says termination of deductions for personal exemptions other than temporary senior deduction. So they're saying they're keeping the senior deduction. And there's language here that it's staying through the Trump term. That's really what this other date language, I don't need to go into it because when you go to C, deductions for seniors. If you look at this, they're doing a new amount added to the existing language of $6,000 for each taxpayer that's 65 or over. That's all you really need to know. Now you need to know one other thing. Section with 3 I's, limited based on modification of adjusted gross income. All that's saying is that $6,000 gets reduced the more you make for an individual over $75,000 or a married couple over $150,000. Most likely, if you're making more than that, this is going to have minimal effect on you. You probably don't care. But that's important to know. All the rest of the language just makes it effect for 2025. Section 70102. This is an increase in the standard deduction in general, not just for seniors, in general. And I think what I want to highlight here is there are a lot of numbers in here. Keep in mind, the previous tax cuts by Trump were going away. So don't get confused with all these other numbers that they're striking. Our taxes were going to go up. The standard deduction was going to go to be less in most cases than it was under the previous Trump tax bill. But really what you need to look at is the standard deduction is changing to $15,750. That's what this is saying, inserting $15,750 because it was $15,000. You're getting an extra $750. That's what you're getting. And if you're married, you double that because it was $30,000, jointly 15. So I've highlighted here, and I didn't really highlight it, but it says 2024. Now we're moving away from the bill. We've got our numbers. We've got what the bill says. You can feel confident now that I just show the standard deduction in 2024 for a single was 15, married filing jointly was 30. The senior deduction was for a single was $1,600, married filing jointly was $3,200. Now, 2025, it's changing to the $15,750 for single, $31,500 for married. It's going up. But the senior deduction, as we talked about adding the $6,000, it's turning the $1,600 into $7,600. So the senior deduction getting a boost of $6,000 in the language. And it's double that for the married filing jointly. Again, I'm not getting into head of household or any of that. It goes to $15,200. So I did a quick comparison, adding up all the numbers. Basically, singles went from $16,600 in deductions to $23,350, an increase of $6,750. Married went from $33,200 to $46,700 for standard deduction if you're over 65. Included both in there. So you're getting a bigger standard deduction. Now you go, oh, what does that mean? What does that mean? Do you know what your tax rate is? I first was going to put up tables of tax rates, but that doesn't do you any good because there's two factors here. One is Social Security is taxed up to 85% of the amount you receive for the year, depending on your total income. So I can't figure out anybody's tax liability for those that are collecting Social Security because I don't know how much you're actually earning. And earnings could be another job, interest income, how much money you're taking out of your 401k. All of those factors go in. Makes it almost impossible for me to figure it out. But then I figured it out. That's the beauty of this thing, is hopefully you can figure it out. In here you can see I Googled the 6,000 because I wasn't sure if it was being added to the existing, and it's being added to. I went to the AARP. I'm a member of AARP, so I get access. If you don't belong, you probably don't get access to this 1040 tax calculator to estimate your taxes for the next year. Now we know the tax calculator has not been brought up to speed with all of the Trump's new standard deductions, but it does have a nice calculator for figuring out your total income, including Social Security, and then figuring out what that percentage for Social Security is, and then figures out what the standard deductions were based on the tax schedule that was either planned for 2025 or the old 2024 to use as an estimate. So I took the average of everybody who receives Social Security. There's an average. The Kiplinger reported that, and I believe this was based out of last year's numbers, that the average benefit for everyone in the retirement system, for all retirees, and I think it was either based on 2024 or 2023, was $2,178.71. So I ran with that number. I said, okay, the best I can do for you is give an example based on the average. So if you take the 2,178 per month times 12, you get 26,136 for a single. We know up above the standard deduction for a single person, we calculated out at 23,350. So you're a little bit under. Your Social Security is still higher than your standard deduction. So let's see how this plays. So I went into my AARP numbers and I plugged in Social Security benefits of 26,136. And it calculates for me that my taxable Social Security benefits at the average would be $4,034. See, Trump didn't eliminate taxes on Social Security benefits. That number would be zero if he had did what he told us he was going to do back last year. But somehow that didn't make it. I'm not so sure you're living on Social Security alone. And so I took a guess and said, you're earning $20,000 more in other income, interest, 401k, those kind of things. Because I wanted to see this impact. Because if it's zero, I will tell you if it's zero, your taxes would be zero because $4,000 worth of earnings in the tax table doesn't get you any taxable income. But you throw in $20,000 and your taxes, not based on Trump, based on this calculator using old numbers, your taxable income would be $903 because you were getting the old standard deduction of $15,000. That was the major standard deduction. But I'm rolling back here that your standard deduction really is $23,350. So instead of that $15,000, I wanted to get it somewhat close to the 23. And so I did this whole process again, the same average, the same $20,000 in other income. It raised your taxable income to $24,000, and I tried to get it as close in these. I itemized the deductions to try to get to 23 number. So it plugged in the 23,000, and your tax liability now is $64. So you went from, if there was no Trump bill, to 903. Your tax liability is 64. If you're doing the average Social Security check and you only have 20,000 in earnings. So this is just an example to show you how IRS has a 1040 estimated taxes. You could go in there and play with the columns and plug in your own numbers to catch this. I don't know if it'll give you the taxable amount for Social Security like the AARP. Now keep in mind, above this, I answered the question, this was for a single return. You can change that to married jointly filing, and you would get different numbers with both incomes. How much Social Security your wife gets, how much you get, it would all be in there. But I wanted to show you some impact. So this kind of goes back to my overall statement that I started to make in the before I did this calculation with AARP, which is, I'm not saying it's perfect. I'm not saying it's totally accurate. But I made this statement, most married taxpayers are going to probably double that savings that we just did for single. Probably $1,000 to $2,500. If you make a lot of money, remember, there's a clause that you don't get the full $6,000 per individual. So I wanted to put this video out. I'm so tired of listening to no one with the numbers. I even made some claims that were not totally correct until I could read the bill. Reading the bill made a difference for me that you are getting a $6,000 extra per person, plus a little bit more for the standard at $750 per person, which equates to lowering your overall gross tax liability. So when it goes to the tables, you pay less. It's not a super windfall. It's not like if Social Security was not taxed. That would have been a huge win for people collecting Social Security. And I only say a win because it would re-bring it back to where it was before the government made it taxable. It wasn't taxable years ago. That's the way I believe it should have been and should have stayed and should have gone back. This is a 4-year break. It gives you partial of the break, because if you just use these numbers, all of your Social Security, like the $26,000, you would knock off $4,000 more dollars. So you'd be knocking off $10,000 instead of the $6,000 that you're getting. Just, it's rough. In the comments, if you don't think I'm right, but I think I have checked this out. This is what is the impact. And you can do this if you belong to AARP. Pull up this 2025 estimator, or I would wait a month. AARP is probably going to have it updated with the new Trump numbers and the true standard deductions for those that are trying to estimate taxes. So I'm just kind of giving it to you the way I saw it. I did plug in my own numbers. You know, I'm saving some money. I'm happy about it. Now, the total impact of the bill and the political that's going to go on, yeah, I've learned years ago, sound bites are sound bites. Read the bill. Look at what its impact is on you, even if it's the other sections. If you're concerned about other benefits and other things, read the bill. Pull it up. It's available on the web. You can pull it up. You could copy it. You can print it. You could print your section. Just do it. That's how you find out what the real impact is. So it does benefit people 65 and over. Doesn't matter if you're on Social Security. Still helps reduce your overall tax liability. If you like this video, like and subscribe. I really appreciate it. This is a unique one for me, but I think it's one that's he signed in the bill today. Why not put this out? Thanks for watching.